Hey, it's Michael Saul, also known as Tiny. This is the market video for the week of October 13th, 2014. No video last week. I have been dealing with a bout of acute sciatica. Tonight's video is going to be very brief. Let's take a look at what happened in the market. Well, I emailed my list and said I was going to be out of it and probably wasn't going to be updating anything because I couldn't sit at my desk. So right then, you should have got the clue that it would have been a volatile period. It's the rule of Tiny. Whenever Tiny is away from the market tends to move. But anyway, we saw some expansion in range as the pullback that started in mid-September up here continued. We came down to the low that was put in the early August, also the 200-day moving average, and it also potentially completes the head part of what could be a head and shoulders reversal pattern here. This is obviously the deepest pullback we have seen in quite some time. We are oversold on a short-term basis, so I am going to be watching for any further weakness that gets bought and remounts this 200-day moving average. We're at the 200-day. We're at the key. We're at the key support here. You could see if we change to the S&P futures. Whoops. As I'm doing this now at 9:41 on Sunday, we're down nearly 7 points. You see we're through the 200-day moving average. But if we can trade below it on the cash market and then remount it, we could be due for a bounce here. Now, is this ahead? Are we going to get the right shoulder? I mean, I don't know. Maybe it's an inverted cup and handle pattern, and maybe we don't get the right shoulder. But as of right now, I would still not be ruling out the bulls just yet. And I would be watching for a potential bounce here. But if that bounce fizzles, or if that bounce, fades quickly, then we could be in store for some more downside without a right shoulder. Okay, super gurus are calling for more downside on the short term. So of course, you always have to be careful of a bounce there. I mean, I told you so a couple of weeks ago, and I'm not saying I called this pullback, so don't think I'm saying that, but I said, we got to be careful because the super guru was pounding his fist on the table that we're going to go to NASDAQ 5,000 by end of year, and it's just amazing. As soon as he opens his stink breath mouth, the market gets the biggest pullback it's seen in quite some time. It's just amazing. But anyway, no, I'm not saying I called this pullback, but, and why am I mocking the super guru? Well, because the super guru is no better than the public. All right, he's so far behind. He thinks he's ahead in the race, and he's always the last to make the move. He was putting out these big, expensive short selling lists on every rally and getting them, just destroyed, killing all the people that would sign up for the lists. And now all of a sudden he finally decides to get bullish, and that's when the pullback comes in. So now, of course, he's quickly turned back to bearish, which means we could watch for a short-term bounce. But, seriously, I mean, I think we're going to get a bounce. I just don't know how far it's going to go, and it really has to be watched carefully. Here's the NASDAQ, which had been holding up really well, and then it just kind of faded away last Friday. Watch the 200-day moving average, see if it wants to test that. That's still a couple percentage points away here. The Russell has been leading to the downside, so that's nothing new. And, new lows, a new 52-plus week lows here. So see how far it goes. You have support down here, just under 103, and then just under 100. Or let's see, is it just over 100? No, it's just just over 100. So you got whole number 103, then whole number 100 for the Russell. Mid caps, they're also on their way down here. New 50. Let's see. New highs on the year. No, not yet. Not yet. New highs on the year. And then the Dow following the S&P, right at the 200-day moving average. Let's take a look at bonds. Yeah, ripping here, ripping and tearing here. Looks like they want to test the highs up here. Not too far to go to get there. And gold. Okay, gold is experiencing a bounce, but right now it looks like I got to clean up these. You can see how long it's been since I've looked at charts, or at least looked at a chart of gold. I try to look at the market every day, but sometimes I only get a couple of seconds. I'm able to sit down, but you can see here it's forming out a new range here. So, I mean, maybe it's going to form another base and get a bounce here, but as of right now, it is in a consolidation, and we have to watch to see which way it tips its hand. So again, Expecting light volume for Columbus Day, but I would be watching further downside that gets a buy, that catches a little fire and then remounts the 200-day for a bounce. But again, I want to see how far that bounce goes. And if it doesn't go very far, then we can be looking at further downside. See if it's a head and shoulders, an inverted cup and handle, or maybe just a pullback. Maybe we go right to new highs here into the end of the year. All right, remains to be seen. I am certainly not going to abandon the bulls just yet. They have been relentless here, and I think it's a little silly to give up on them so quickly. So, we're still at the 200-day moving average, at least with the broad market here. And, of course, the NASDAQ's above it as well. All right. So that's it. Any questions, tiny@stockmarkettrendsx.com. For those on the email list, I will try my best to get some updates done. I am actually going for an epidural on Monday, so hopefully that will numb this out and I'll be able to get back to work. All right, I will talk to everybody again in the video or once I get back emailing through the daily email. Have a great trading week.